So is Palantir stock a good stock to buy right now? What's going on, guys? It's Ricky, and let's go ahead and break this down. I made a post on Instagram sharing this where it disclosed that there's a lot of insiders, right? Directors, we have officers, 10% owner of individuals aggressively selling millions of dollars or millions of shares, hundreds of thousands of shares of Palantir stock. Yet the stock kept pushing. Now, I want to talk about the good, and I want to talk about some of the concerns about Palantir. For those that do not know, Palantir is a stock that has been absolutely skyrocketing. At one point, it looked like it wasn't going to make it. I think Peter Thiel was one of the original founders or co-founders, original investors. I remember when this thing IPO'd. It popped up to highs of $45, and then it came crashing down to $5.84. It was kind of weird because I didn't really understand what the company did. It had a really heavy focus in just government contracts. And it seemed like, if you really think about the growth of a company, kind of limited, right? Is that the best way to put it? But now it offers its services not just to government contracts, which it still has a ton of, but also to a bunch of other businesses. I would encourage you, again, even beyond this video, take time, learn a little bit more about the company, and see what you make up for yourself in the sense of your opinion, right? With that being said, the company went from $5 per share all the way to highs of 116 this week. It just reported earnings. It shot up 22% and has been pushing up ever since then. The really crazy thing about this is that this is a company that currently trades at a $252 billion market cap. I mean, it's bigger market cap than McDonald's. It's bigger market cap than a lot of very large companies, right? It's a relatively new company. And the really wild thing about this is that this is a company that generates about $2.8 billion of revenue a year, not a quarter, right? A year. Yet it's valued at $252 billion. Very quickly, using Investing Pro, you can quickly see the overall growth that this thing has had in the past year and quickly see the PE ratio. A lot of you guys understand that I like to refer back to the PE ratio. Now, a lot of software companies always have kind of like high PE ratios. This one has a PE ratio of 546 times its earnings, meaning that, again, versus what it is currently valued at versus what it actually makes, it is currently valued at 546 times more than what it makes. Now, I want to use this as a comparable. Something like NVIDIA, right? A very strong company, but a very wealthy company that actually produces a lot of revenue. And again, some people still think that this one's overvalued. This one's trading at 50 times its revenue. Very different, right? But PLTR, again, when you quickly look at the PE ratio, 546 times its overall earnings. You could see its revenue for the overall year is going to be right around $2.86 billion. And the net income of the company is actually $467 million. Now, we're going to be breaking this down in detail. We're not just going to go into the insiders. We're going to talk a little bit about the company, how it produces revenue, and where it actually makes it from. Again, I wanted to do a little bit of a deeper dive. I don't really make videos like this. I would love to make more videos like this. And if you like it, again, all I ask you to do is drop a thumbs up and make sure you subscribe to the channel. For those that are checking this out and are asking what software this is Investing Pro. It is a software that I use. You do not have to use it, but again, it does make it a lot easier to perform a fundamental analysis on the different stocks that I'm considering investing in. If you like the software and you want to test it out for yourself, the first link in the description down below will give you the biggest discount. It's bigger than any sale that they currently offer. It's the first link in the description down below. If you use my link, you will get the biggest discount. And of course, you could cancel at any time. So if you have any questions about that, comment down below. But the first thing that I want to highlight is, well, what is Palantir and why is it so successful? So like I said, it had an original big focus in government contracts. I mean, I remember seeing posts like this all the time of Palantir wins $250 million US Army service contract for AI. And I'm like, oh, cool, right? Like, I don't know who its competition is. It seems like it's kind of like the leader in its marketplace. But I never really cared too much of it because it seemed kind of like a relatively small marketplace because it could only work with government contracts. At least that's what it was originally doing. Like, I think the original contract that it started off with was like with the CIA, which is pretty crazy, right? Think about it almost like as a Boeing but for technology, kind of like for software and AI. So to my understanding, Palantir takes all of this data from these companies that's very difficult for this company to digest, and then finds kind of like almost formulates a puzzle of how to properly digest that data so the company can use it in a more efficient manner. Now, again, obviously this requires companies to have a ton of data. And again, they have to be extremely large companies, but supposedly it helps them make very informed decisions that can help them succeed. Now, again, the thing that I want to get into is its financials. Now, this is also provided by Investing Pro. Again, they just make it very easy for you to be able to see in a visual way, which again, I'm much more of a visual learner. The thing that I really like about this is that this is highlighting the growth for Palantir year over year, right? Or quarter after quarter. So you can see that there's been continuous growth. So there's a lot of inflated companies out there, right? We can go into the details of, okay, how is this any different than MicroStrategy? Well, that's what I first want to highlight. MicroStrategy, you guys have heard me talk crap about it before because we all know that it's a terrible company that simply buys Bitcoin. Like, that's a very easy company to pick on because it's a terribly ran company because it has one thing going for it. Same thing with GameStop. GameStop was a terribly ran company that was able to take advantage of this movement, and it began liquidating a bunch of its shares to put cash on its balance sheets and then put itself in a good position where it bought itself time. Palantir is different. Now, it's kind of like almost this unicorn in a sense of not only is it an incredibly hyped up stock, because I think anyone could see that, right? Any company that grows 500% in a short period of time is bound to be considered overvalued, especially when it's trading at over 500 times its earnings. But man, it kind of not just talks the talk, just like the CEO, but it almost walks the walk. It's kind of a hard company to hate on. That's why I've made a joke about it before of, hey, this wouldn't really be a safe company to short because it's so incredibly bullish. It doesn't only just have the hype of kind of like GameStop and MicroStrategy, but it also kind of has the fundamentals, kind of. And I wanted to share this with you guys because its growth is consistent. Its business is actually growing. It's not just like a facade that it's putting up. It is actually growing and expanding. And it looks like they have great projections for 2025 and for 2026. Their balance sheet, they have over $5 billion and no debt. They have $5 billion in cash. I think it was $5.2 billion in cash on its balance sheet. And it has no debt. Like, that is incredibly impressive for such a young company. And this is where it highlights it. I wanted to point it out for you guys. It says year stock return 71%. Gross margins for the company this past year has been 81%. It says FCF margin 37%, and estimated fair value is $68, which is, again, still incredibly high. One of the things that it showed very impressive was that it has cash and investments, $5.2 billion. Now, this is where things began to get a little kind of like, when I began to do a deeper dive, it was like, this looks incredibly impressive for any company, right? Even if you don't know much about how to perform a fundamental analysis, you see that and you're like, dang, not only is the stock growing, they have good margins as a company. Those are very healthy margins. And they're also kind of like a wealthy company. They have no debt and $5.2 billion on their balance sheet. Like, that's how much cash they have on hand. Now, I, again, looked a little bit more into kind of like these kind of like income flows of how the company produces revenue. This is for Q3. This was, what was it? Right on over here. It looks like they haven't updated it for 2024, the most recent filing, but this shows like their commercial revenue. This shows the government revenue. This was for Q3 of 2024. Their overall revenue was $725 million, and then how it splits into the cost of goods, gross profit, R&D, which is research and development. It goes all into this. Overall income tax, net profit, $143 million. So when you actually go into it and you look at the most recent one here, you could see that commercial was $372 million in revenue, which is a 31% growth year over year. Government revenue grew 40%. So again, both sides of their businesses are growing. $455 million. Overall revenue was $828 million. Again, incredibly impressive. It's growing. That's the thing. Do I think it's impressive in comparison to what it's worth, what it's valued at $252 billion? No. That's not what I'm saying. I'm just saying that its business is growing 36% year over year. Its gross profit, it's 79%. So it fell a little bit, but it's still really, really good. 79% is super healthy margins, right? Cost of revenue. Then this is where I began to kind of like, they have a bunch of, operating expenses, all of this, right? They pay a bunch. One thing that I really did not like, I've shared it on my Instagram, their net profit and then what they spend on compensation based on stock-based compensation. Quarter after quarter, they continue to pay out more in stock-based compensation to their insiders than they do make as a company. And they pay more in the hundreds of millions of dollars, which was kind of concerning. Like, why are the insiders getting paid so much, as in like their team? Supposedly, again, a lot of people say that, well, this is what newer companies have to do. They have to aggressively pay not just good salaries, but stock-based compensation to really attract good talent, which again, does make sense, but it was not just like a little bit, it was a ton. The company is paying so much more than what it makes to its insiders based off of stock-based compensation. And then what I didn't like to see is that so many of the insiders are just liquidating. A lot of these insiders are just selling. Again, this is all public info. You guys can look it up yourself of the number of shares that are being sold, the number of shares that are being bought, and year again, right? We continue to see more shares are being sold in the past 12 months and in the past 3 months than are being bought. And again, we're talking about in the millions of shares more are being sold than are being bought by the insider. I just think it's important to be aware, right? So you are not surprised. With that being said, the thing that stood out to me most was this. Again, when you do a little bit of a deeper dive, this was its most recent filing. This is what I want you to pay attention to. Its net profit was $77 million. Okay, $55 million of that was interest. I think what people don't understand about that is that $55 million that they made out of their $77 million of net profit was made from its $5.2 billion that it has in cash. So it's, again, I mean, every company is different, but because they have so much cash, they're able to earn interest off of it. And that interest ended up being $55 million. That is what they reported out of their $77 million. So again, it's not their business that's generating the $55 million, but it's the cash because they have so much cash that it's earning interest. Now again, other companies like Tesla has reported their Bitcoin earnings, and that was part of their profit, right? So different companies report different things. But again, to me, it almost is like a gimmick because, well, especially if we're expected for interest rates to drop, then this company is bound to earn less on interest. So again, this can't be a surprise. And again, we will need to make sure that we understand that that $55 million that it's making, it's off of interest, not the actual business itself. It's just something to take into consideration. To me, it kind of almost seemed like a gimmick, especially for a company that's so incredibly bullish and possibly overvalued. I think like when it's playing with these kind of gimmicks, then it becomes almost a little bit more concerning of, okay, well, we have a $252 billion company that produces $77 million worth of profit. But if it wasn't for its interest, it would only produce $22 million a quarter in profit. Yet it's a company that is worth $252 billion. Again, something to take into consideration, just something to be aware of so you're not surprised, right? Gross profit, operating profit, 1%, interest, other, that's the 15, and then we have a total of 77, which is 9% margins based off of their overall gross profit. So I just think it's an important thing to highlight. When we look at Investing Pro, and we can quickly see kind of its rating, this is probably the part that I find to be the most useful of Investing Pro. As a lot of you guys know, is I like to either take advantage of oversold stocks and buy them for a good deal, or if a stock is overvalued and there's some pullback potential, then I like to short it. This thing is showing that because of how much it's gone up, there's high uncertainty, right? Because it's a range from 46 to 62. There's high uncertainty and about 50% of downside. The average price is right around 52.98. And again, there's analyst targets that are on average right around $82 per share. The part that I find very interesting about this is that if you also look at its history, when it does begin to retrace, again, they're about 20 to 25% pullbacks. It doesn't happen very often, and that's one thing that I want to make very clear. It doesn't happen very often, but when it does lose about 1/3 of its value. And I think that's an important thing to highlight of, hey, Palantir does pull back from time to time, so just be cautious of it. I've heard a lot of Palantir investors where they don't plan on selling, which I don't blame them. It's an incredibly bullish stock. It's growing year over year, and it's cash rich, no debt. It has everything going for it. And all of this hype, like Wall Street obviously loves it. And we want to respect it. There's kind of this quote, and you guys are going to have to correct me down in the comment section. But the quote kind of goes like, the stock market can stay more irrational longer than you can stay kind of like sane. And that's a very true statement where, there's no reason to try to, and I'm trying to say this for all of the beginners. If you're an experienced trader and you see this as a potential short opportunity, then all power to you, right? But I just don't want to see beginners jump into shorting this. And again, a lot of you guys know that I love shorting, right? But I would hate to see someone try to short this for a stock that is so incredibly bullish. Fundamentally, it is very well ran, and there's just a lot of hype behind it, right? There's a lot of momentum, and just like we've seen before, just because a stock is overbought, it can still push higher. I've seen a lot of investors that are invested in Palantir that do believe it's overvalued, but they have no intention of selling, right? They have no intention of buying at these levels either because they do understand that it's overvalued. But again, if a slight correction happens, they're just expected to buy more and see if it continues to rally. It's AI focused. It's a software company that originally started with the government that is now expanding to a different market. So again, a lot of people don't understand how big its marketplace is really. And it has everything going for it. It's cash rich, no debt, and Wall Street loves it. And that's a very dangerous formula to try to bet against. Now, I'm not here to say that it can't pull back. I'm definitely watching it myself to short it. Because again, I would love to see if I can get a little piece of that potential pullback. But I would never recommend this for a beginner. This is a high growth stock that is up over 500% year over year. And let me make this very clear. If you're terrible at managing risk, do not trade this thing, long or short, right? I think it's very important to understand that this is an incredibly bullish stock that can be very volatile. And again, you just have to learn how to walk before you run. And I think that's very important to take into consideration when choosing to trade stocks like this. So again, I wanted to do a little bit of a deeper dive. I, of course, wanted to highlight and give credit where it's due for a very successful and well-run company. But I also wanted to point and highlight some things that are kind of like red flags to me of why it could be overvalued. So you guys let me know down in the comment section what you think. Again, I hope that it earned your thumbs up. And don't forget, if you guys want to download Investing Pro to be able to perform a little bit more of a fundamental analysis on the next trades you choose to take, first link in the description down below will get you one of the biggest discounts. Also, if you want to watch me trade live as soon as Monday, that's going to be that second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.